Well, hello everybody. Welcome to the video. My name is Brian, and today I want to talk about something that just about every investor and business owner has to think about, and that is the way to hold title, whether it's a business or it's rental real estate. Now, in my specific case, it's all about rental real estate, and that's how I'm going to be addressing it. Now, before I get started, I just want to let everybody know I am not an attorney. This is not advice. This is just information that I have learned as I am going through my journey. Okay, so my son and I both got started roughly the same time investing in real estate about 5 years ago. And as we accumulated properties, he decided he was going to get an LLC. Limited Liability Corporation. And I didn't think anything about it. I was going to do the same thing. However, in my mind, I had always decided that if I was going to go that way, I was going to get a living trust. And an LLC was something new to me, and since my son's a pretty smart guy, I just decided it was a better idea. So I really gave it no thought. And time progressed, and as I accumulated, I decided it was about time for me to make that decision. So I started doing some research, and I talked to my attorney, and I went to a second attorney, and I went to an accountant. This is not a decision I took lightly. I spent a lot of time and effort doing this. So what I'm going to do today is I want to look at both forms of ownership and the pluses and minuses of both. And for those of you that are just getting started and you're asking, well, why would you do that? For many, many reasons. And we're going to cover those here, and we're going to compare and contrast. Now, the first one is, let's talk about the security of ownership. Both the LLC and the living trust provide security, holding the title. No question, but equal security. Protection, different types of protection. On the LLC, the protection is limited, your liability is limited to everything that is inside the LLC. So what most investors do is they set up an LLC for each property they purchase, or they set up one large LLC, put all of their rentals or businesses in that just to protect their personal assets. Both are good-ish. As far as the living trust goes, for protection, the living trust is much better protection after the look-in period. Each state is different. My particular state has a 7-year look-in, a look-back, which means if anything happens, whether I get sued or divorced or whatever it is, an attorney and the courts can go into my trust, and if it's less than 7 years old, they can find a way to try to break it. After 7 years, it's off limits, and no matter what happens, they can't get back in there. Taxes. Now, this is a big one. LLC is a much worse choice when it comes to taxes, and here's why. First off, let me address what most LLC people are going to say right now. They're going to say, yeah, but the tax rate for the corporations is less than the personal income tax, and that's true. However, if you want to take anything out of the LLC, now you're going to pay personal taxes. So that means that any money that you take out of your LLC, you have paid taxes, commercial taxes, and now you're going to pay personal taxes. You're being taxed twice on the income. Bad idea. Secondly, when it comes to taxes, an LLC you need to set up, and you need to file annual income taxes for your LLC. Now, in that example I gave earlier, if an investor opens an LLC for each property he owns, and he has 10 properties, he now annually has to fill out 10 different commercial income tax forms in addition to his personal. And unless you're an accountant, you will be paying for that. So let's use the example of 10 properties in an LLC. If each if each one costs $2,000, you've got 10 properties, you've got $20,000 invested in how to hold title. In addition, annually you have 10 different income tax forms that you have to pay for. That's a much worse deal than a living trust. Living trust, you are afforded the protection, but everything stays on your personal income tax. You pay personal taxes on that, and there's no second degree of taxing if you decide to take cash out or buy or sell. The cost. They roughly cost the same. With an LLC, depending on how you decide to do it, even if you open up just one, you still have the same amount of cost to set it up, plus annual taxes, plus we just covered all the taxes. How many do you need? Well, that's a question you have to ask yourself, and one of the determining factors is the cost. Now, my son is elected to do one LLC and put all of his properties into there. There are benefits to doing it both ways. Now, when it comes to the living trust, you only need one living trust unless you have multiple beneficiaries, and then you can set them all up at the same time. And it just depends on the number of beneficiaries you have. Total protection. With an LLC, you get no total protection. There's a reason that the title says limited liability, because you are still liable. If somebody gets killed in a fire and they sue the LLC, they can take everything that's in that LLC, all of your properties that's in that LLC. With the living trust, after 7 years, you are totally protected. If anything happens inside the living trust, they cannot get into the trust. All they can do is go after insurance and you personally. Huge difference. Transferability. Now this is big for a person in my age bracket, because you're worrying about how are you going to transfer your assets. Now with an LLC, if you set up your business plan like any other business, how you set it up is strictly up to you. But I can promise you this, if you try to transfer or give ownership to the LLC after death, there are going to be inheritance taxes, there's going to be attorney's fees, and there's going to be a lot of expense when you pass away. The transferability on an LLC is one of the primary benefits of a living trust. There's no attorney's fees, no inheritance tax, there's no probate, there's no nothing. Upon my death, the person that's taking care of my estate hands the copy of the trust over to the beneficiary, and the beneficiary starts to take care of everything inside that trust. They now own the trust. Again, with the inheritance tax, LLC, there is going to be inheritance taxes for sure. With the living trust, no inheritance taxes. Probate, we covered this also. LLC, there's definitely going to be probate and attorney's cost. Living trust, no attorney's cost, no probate cost, no courts, no judges, no nothing. Convenience. With an LLC, this is anything but convenient. You have to keep minutes. It's a corporation, so you have to keep minutes. You have to have operators listed. You have to pay individual taxes. You have to have individual tax forms filled out. You have to pay for accounting unless you happen to be an accountant. Everything has to be done just like a corporation, which involves costs. The convenience in a living trust is once it's set, it's done. I mean, you can move properties in and out, you can buy and sell, but there's no additional taxes, there's no additional costs, no probate costs, no attorney's costs, no courts, nothing. So the convenience, as far as the comparison of the two, the living trust is by far the better choice. So I set up a living trust. My son set up the LLC, and I was getting ready to have a discussion with him about this exact topic. And the more I thought about it, the more I thought, you know, if I had to do it over again, I would do it somewhat differently. And here's what I would do to maximize my protection. When I go to the attorney, I would set both up. I would set up a living trust, and I would put one little thing in there that doesn't matter. And then I would put my properties in the LLC. The reason I would do that is because right up front I've got limited liability. I've got some protection in the LLC. In the living trust I have nothing until after 7 years. So what I would do is I would open both. The clock starts ticking when that the living trust is drawn up. That's when the clock starts ticking. You just put something worthless in there so that the clock is ticking. You put all of your properties into the LLC. After 7 years, you liquidate the LLC and you move all of your assets into the living trust. Now you incur all of the costs and everything for the first 7 years, but after that, you're back to a living trust and all of your expenses go away. Well, that's pretty much the comparison that I saw between a living trust and an LLC. You make up your own mind. I hope you got some benefit from this video, and if you did, would you please consider subscribing and liking the video. Now, I am never going to monetize this channel, but I would like to reach more people. So if you would, please subscribe and hit the like button. Thank you. Have a great week, and we'll see you in the next one.